Hi guys, this is Mitch Firestone with Precision Trading Labs in New York City. It is March 26th, and I thought it might be interesting to talk to you briefly about a trade that I had this morning involving Facebook. I'm sure everyone's aware that Facebook's been embroiled in some controversy for the last couple of weeks involving the third-party company that they've been using, Cambridge Analytics, and the whole basic deal about improper use of their customer data and data being utilized in for political purposes and all that kind of stuff. So at any rate, Facebook has sold off over the last few days, and they actually thought perhaps maybe it would sort of share in today's market rally after the big broad market sell-off of Thursday and Friday, but that was not to come to pass because, in fact, this morning the Federal Trade Commission announced that they were going to be looking into the whole deal with Cambridge Analytics and Facebook's use of data, and as a result, the company took another shot down in the pre-market and in the early trading this morning. So right here, we're actually looking at a daily chart of Facebook, and this is what I was looking at this morning at around 10:40, so about an hour and 10 minutes after the market opened Eastern Standard Time. And so you can see this is basically Facebook was down about a little under $8 and a little under 5%. So definitely not having a good day. So I was looking for a level where I might be able to conceivably catch a bounce. But when I always do that, generally I will always do that looking at a chart in a higher time frame. And so that's in fact why I was actually looking at a daily chart here. I was actually started out looking at a 5 or a 15-minute chart, but I'm sure any of you who have been trading for a while, a lot of times when you try to catch a falling knife with a 5-minute chart or a 15-minute chart, yeah, when it works, you feel like a hero. But a lot of times it doesn't work because basically it's just the time frame is just too small for that, and essentially it just doesn't have the resilience to kind of take the punch of the price action that's going in the opposite direction until it could kind of catch it, stop it, and reverse it. So consequently, when I do try to catch a bounce off of a falling knife, I try to do that off of a chunky time frame, usually a minimum of a 2-hour chart, preferably a half-day chart or a daily chart. And so in this case, I brought this thing up to a daily chart, and I found kind of generally one of my core setups, which is essentially finding an area of consolidation where there is then an explosive move out of it. Which signifies that there is, in this case, an exhaustion of sellers, and there was an area of tremendous price imbalance that was sitting here. And so that was sitting at roughly about 149.50. And so that was what my setup was looking like here. If we zoom in on it a little more here, this is just a close-up of what I was looking at. And so again, there was this price had come down into this level, a little area of consolidation, and then this succession of very bullish green candles that came out of that. And so the theory was, and the plan was, when price came down to this level, I was expecting somewhere in this to basically catch a bounce. And so that was the game plan. So when I was looking at this, though, this level basically kind of defines what my trade's going to be, and it's kind of a chunky level in terms of, generally the higher the time frame, the bigger these zones will tend to be. And so as a result, this thing was about $1.70, $1.80 deep, and that just made me think, okay, I would love to be able to somehow reduce my risk on this and to better define my level. So what I did was I'm bringing this over here, and this is a live chart here. And so again, here's what I was looking at earlier. And so what I did was I converted this thing from a daily chart, and I converted this down to a 15-minute chart. And when I did that, basically what it did was it helped me to better define the level here. And let me go back, and then this level was basically formed in July. And so let me just go back and find this here. Okay, so right here is where this level, where there was the daily level, this is what it looked like in the 15-minute chart. And so what I did was I found essentially a 15-minute level inside of my daily level. And so what I used here was this pivot, the pivot here, where you basically had price come down in the 15-minute chart, consolidate and base out here, and then fire out of here. And so what I used was basically I threw my stop right below this pivot low here. And so as a result, where this was my entire level here in yellow, I managed to basically chop it in half now by using the 15-minute chart to basically define kind of the level inside of the level. And so that was basically my game plan. So now I had my stop, which was right here, my entry point, which was going to be right here, at the top, so at 149.59, okay, and again my stop was going to be sitting just below 149, probably about 148 and change, about 148.80 or so. And so as a result, instead of having a level that was $1.70 deep, it was basically reduced to more like an 85-cent deep level. And so as a result, that basically basically conformed more to my trade plan. So that was the setup. And then that was how I refined the level and sort of set up my risk parameters here. So now if we go back to the daily, what happened was price came back, and you can see it basically dropped into after a point, dropped into the level here, and it came out. And so what I'll do is I'll show you now the slides of this. So basically right there is the slide here. Okay, that's what it looked like in the daily. And once it popped in here, it came out, and basically I got out of it at about 1.5 to 1. The broad market, which was up about the Dow was up about 400 points at that point. All of a sudden, it was starting to give back a lot. I think it was only up about 200, and you could see that the market, at least at that point, was starting to lose steam. And so consequently, I wasn't greedy. I just caught the bounce at 1.5 to 1, and I was very happy with that. Now, if one goes back and actually looks at this, and if I put this back into the 15-minute chart, you will see that, in fact, it went a lot further, because there was my entry point. There's where I got out, and you can see this thing went far further than what I had, in terms of where I had gotten out. But no complaints. Can't be greedy here, and of course everything is very clear in the rearview mirror. So at any rate, that was the trade. And again, what I liked, and again, what one can do on these things is basically you're always better off if you're going to try and catch a bounce. Pretty much bring up a higher time frame. Use a daily chart. Use at least something of an hour or two, because that will be something that can kind of take the punch of the price movement, which is going to be obviously going in the opposite direction of what you're looking for at the start. So at any rate, that's the story, and write to us or check out our website if you want some more information about us, and we will catch you next time. Take care. Bye-bye.